So welcome back. I am here today with one of my favorite people, one of the most brilliant businesswomen that I know. So if you've checked in with us before, you see that everything I try to do is give you information that you need to make the proper decisions for you and your family. Today we're here with Anita Murray, State Farm Insurance, and we're going to be talking about those things that homeowners usually don't think about when you're looking to buy that home and then you need to get your insurance. What makes sense, and so as we progress with the conversation, we'll come up with some more questions and things like that. So I want to have Anita Murray introduce herself, and then we'll go from there.
All right, so I'm Anita Murray, State Farm agent here in Westland. I've been doing this for 19 years, and I'm really excited to be here. So thank you, Edna, for inviting me.
And she is probably one of the most trusted insurance people that I know. I worked with State Farm for 10.5 years myself, which is why my policies are here with her. And I actually believe she's been with State Farm for over 19 years because I met her when I gave birth to my daughter, who's 22.5 now. So it's been a while. So today we want to talk about when your loan officer says to you, now you need to go and get an insurance policy and bring me back that deck page. What does all that mean? So let's talk about that policy, what it maybe needs to look like, and what's a deck page?
The deck page. So on the deck page, basically it will show the loan amount, and what your loan mortgage rep is generally concerned about is covering the loan amount to make sure that they're protected in case something were to happen. But from an insurance standpoint, it's basically the replacement cost, what it costs to repair or rebuild your home if something should happen. So we will list the loan amount or your replacement cost. Also, it shows the premium for the year, and it will have the mortgage company listed as the lien holder so that you can close.
One of the things that I find and that we'll talk about is I have a client, they're buying a house. Let's say the house is $250,000 that they're buying. They call to get a quote, and the quote comes back at some enormous amount, let's say $2,500, because they're covered for $350,000. And they're always like, they told me I don't have a choice. And so why is there a difference with the amount that they purchased the home for versus what it's covered for in insurance policy? And is there any way that they can make some adjustments to make that first year's policy a little bit more reasonable?
Right. So the $250 is more so based off the market value. So when you put in your offer or you close on the house, it's generally at the offer that you made for the purchase of the home itself. But that may not necessarily be the cost to rebuild. So once we calculate your replacement cost, that's the features of the home. We'll ask the square footage, the year built, the construction, like whether it's frame, brick, your square footage, how many bathrooms, your flooring, all of that. And that'll help us determine how much it costs in materials and labor to rebuild your house. So oftentimes that's a lot higher. Not so much in this market now. We don't see that as much right now, but because some people are paying over market value to close on a house. So right now it's kind of the reverse, but every now and then it happens, and things you can do to save. The mortgage company basically just wants to cover the loan amount. So what we can do is we can reduce, once we come up with your replacement cost, we usually have 100% of the replacement cost. You can reduce it down, like with State Farm, to 80%. That helps you save. If you go lower than that, you kind of mess around with actual cash value versus replacement cost. So it's kind of dangerous because if something should happen, you may not have enough coverage to rebuild your house. So you want to be careful with that. But you could take higher deductibles, things of that nature to help you at least get through the closing phase. And then afterwards, we could revisit the policy and make changes that are necessary.
And you might want to think about multi-lines. So if you add your home and your auto together.
Yes, you save, with State Farm, you save 35% on your house. You save 17% on your autos.
Okay. Yeah. So do you get a discount if you do life and health? Because there's a lot of insurance policies that you can bundle together.
We don't have multiple discounts. So the homeowners and the autos really the auto is the only discount on the house at this time. And the homeowners is one of the bigger discounts for our auto, outside of having an umbrella policy, things of that nature. But yeah, so you'll get 17% off of the cars and 35% off of the house. Which
35% is huge.
It's best to bundle. That's the best way to save.
Okay. Wow. So in that coverage that they need, you can do the bare bones where you don't have a lot of contents. Certain areas you want to think about sump pump backup, those type of things, because those are things that people don't think about up front. But if you're in an area that has a high water table, or if there's a sump pump there, you may want to think about adding that coverage. So let's talk about that.
So the backup of sewer and drain,
yeah,
you definitely want to add that, probably even if you're not in an area with the high water zone. Because lately with the storms, oftentimes the city's pipes have been overwhelmed, and it's backing up into homes that have never backed up before. So people that we would offer it to, they're like, I've lived in my house for 30 years. Nothing has ever happened, so I don't want to pay for that additional coverage. But once the storms came through, I would say, 2016 was the main one, the first one we had, really big, where 696 was flooded and all that. But since then, it's been getting a little worse, so we pretty much offer it on every policy. You have to tell us no, because that's the worst call when they call and it's not covered.
Oh, yeah, I forgot about that, because, FEMA comes through, I think annually now, and they reassess the flood maps. I don't know what that's based on, but you can go to, I believe it's FEMA.gov, and check your address and see where you are in that flood zone. That might not be a bad idea to check that, because certain areas that have a tendency to flood, when the client is looking in that area, I usually do Google their address, look it up through FEMA, just to see, because the current homeowner may not have flood insurance.
Right.
But the new owner may need to have it if they've changed that flood map, which they've been doing a lot lately. So that's something to keep in mind. So that backup sewage coverage, what does that cover and what doesn't it cover? Because a lot of people think it's just supposed to do everything, which I'm understanding it probably doesn't.
It doesn't. So it's basically just if water is backing up through your drain, through your pipe in your home. If water is coming in through window seals, like basement windows, through the foundation, through, I guess, any of their door wells, depending on how high the water is outside, that's a flood policy. That is not backup of sewer and drain. If you have water seeping into your house, like cracks in your foundation or something like that, that's more so a maintenance issue that's not generally covered by an insurance policy. So that's the difference. But when you spoke of homeowners and your contents and being able to adjust the contents coverage, on the homeowners, it's generally a 75% coverage for your personal property on your dwelling amount. So if you have a house that's insured for $100,000, you'll automatically have $75,000 for your personal property. So you can increase it from there, but that would be the minimum. So if you're trying to save, you just leave the policy, the standard way.
Instead of trying to cover your artillery and your jewelry, you still have jewelry policies?
Yeah, we put that on a separate policy. That's the personal articles policy. That's going to give you broader coverage. So if you have valuables, you definitely want to look into a personal articles policy as well.
Now see, these are all things that you probably should discuss. You may not want to pay the money up front when you're first buying your home, because you got your down payment and all your closing costs, but you should revisit that and consider those coverages instead of just getting the policy just to get it over with. Because when you need insurance, you don't want to find out you don't have it. It's one of the worst times to find out.
That's the absolute worst time to find out that you don't have it.
Yeah, so you want to have that discussion up front. And granted, most people just want to do the bare bones when they're getting in. Some people, however, I'd have one client that they took everything that was possible because they didn't want to worry about it.
Right.
So that's to set it and forget it, which made sense. But you definitely want to at least look at those things. Another thing I wanted to mention was people talk about mortgage insurance. I don't know if they call it that anymore. Back in the day, there was a policy called mortgage insurance. You would take it out for the amount of your home. And as the years went by, that policy decreased because supposedly you paid off your mortgage.
Right.
I don't think it took into mind that people have a tendency to refinance.
Absolutely.
Because I have a mortgage policy, not I do, but we have one, my husband does. And so we didn't think about that at that time, that we might refinance at some point and then we owe more. But that mortgage policy is still decreasing. But a lot of people want to make sure that if they pass away, what happens to my home? I want my children to have it, my grandkids or whatever.
Right.
So that's something that you probably want to have a discussion about. So if you can tell us a little bit about how that might be able to work.
Sure. So the mortgage protection is life insurance. And when you talk about it decreasing, it was basically a decreasing term policy. So as, like you said, as you paid off the mortgage, the term coverage would decrease. We stopped offering the decreasing term policy. So we now just we have a regular, I generally quote a 30-year term policy, and we do it for the mortgage amount, or if you want to have a higher coverage for maybe education or final expenses, different things that could come up that may be more than the mortgage, then we do a 30-year policy, and it helps to address what you're speaking of when you refinance. It's pretty much locked in for that amount of time, and of course it renews after that at a higher rate, but it's meant to cover the mortgage. So if you were to pass away, it'll pay off, where your family could use the money to pay off the loan balance if they don't want to sell the house, if they want to stay there. So one less thing to worry about, when you're grieving.
Yeah, because some of the previous discussions we had were with the trust manager, the trust account. We talked about, if someone passes away, what happens with the house? How do you prevent it going to probate court? I know that I deal with people a lot. They'll call me and say, hey, my mom passed away. How do we keep the house? And as a realtor, they're thinking that, hey, there's something that we could do to help them get it into their name, out of their parents' name. It's like, not if there's a balance owed on the mortgage.
Right.
That's a little bit different, but people just don't know. So there are things that you could do. It has nothing to do with insurance at this point, but those are other topics that you can search through my playlist, because we've actually had those discussions. But having an insurance policy to cover for that is actually one of those options that it can be paid off, and then from there are other ways to go through to get that transferred from the parents to you. So might take an attorney, but that's another subject.
Yeah. The other side of that mortgage protection is if you were to become disabled, if you're sick or if you're injured, then you want to protect, the mortgage payment. And we could do a disability policy to help cover, that mortgage payment for you, so you don't lose the house because you can't work or you're sick. That's
a good subject. I had not thought about that, but she's right. So I used to work for State Farm.
Triangle of protection.
Yes. My previous life, and we sold quite a few disability policies for that reason. And we had a woman, unfortunately, she was tight on cash, and so she canceled that policy. And a couple of months later, she called up and she needed that policy.
Right.
And we had to tell her we can't. And so her question was, well, can I give you the money, you backdate it as if I didn't? That's no.
Can't do that.
But that's one of those cases where it's insurance that nobody wants to pay for, but when you have it, you're sure glad that you have it. So you really need to think hard about those things. One of the things that I've done is I've put my life insurance for our family on auto pay, so I don't have to think about it. Mm-hmm. That's not even a question that comes when you're paying the bills. Do I pay this or not? Nope, it's already gone. That's probably one of the safer things to do.
Right.
Because you don't want to need it and then not have it. So, but yeah, I didn't think about the disability. So that is actually, I'm glad you mentioned that, because that's important. So yeah, get the disability. This way, if you are unemployed, and with the state of Michigan, I think it takes 2 years before disability kicks in if you're permanently disabled, because they have a program for, I'm just told, I don't know for sure, but I know quite a few people who've gone through the process, and it usually takes them about 2 years.
Okay.
Before you can get the approval from the state to now be on disability, but 2 years of no income?
I know that it's usually a lot of red tape, because sometimes people are declined and you have to apply again. So I'm not sure how long the process takes, but however long when you don't have income is too long.
If it's a month or two, sometimes that could break people. They usually say to most people have 6 months worth of income for emergencies. Unfortunately, this pandemic has showed us that you probably need a lot more than that.
Right.
But at least that, but even with that, it usually in average it's about 2 years. It's a long time. Like you said, you apply, they deny you, and then you apply again, then they deny you, and then there's a lot that you go through, a lot of doctor's appointments, a lot of proof. Whether or not they follow people around, I don't know. I'm told they do. I don't know for sure, but it's a possibility. So keep that in mind. Disability to cover for the mortgage payments. That's actually disability insurance is not a bad idea. Life insurance to cover for the mortgage as well. Pay the house off so your loved ones can have the house. But then that general policy that you need for the home to cover for the mortgage amount and replacement costs, which means if it burns to the ground, what it would cost to rebuild it.
Right, absolutely.
And right now, that's probably high, because labor is like 2-3 times as much.
Inflation, the cost of materials, everything is more expensive. So
yeah, I've heard.
Yeah, so homeowners rates are trending up, unfortunately.
Yeah.
To help adjust for that. So
construction rates are up for that. So I just got a notice for my HOA that our landscaping for the whole sub, not for my home, that they have to go up like 17% or something like that because of all their costs have gone up.
Yeah,
so
it's expensive.
Yeah, even the guy that comes out and trim your trees, cut your grass, it's up. Everybody's up.
Right.
So yeah, so so there's a lot to think about, but these are things that hopefully that you'll consider, you'll think about, you make your plans. When you are going to buy that house, or even when you refinance, they need to have your proof of insurance, so you can't let it cancel, which some people have tried to go without insurance for your home.
Oh, that's the worst. If you let it cancel, then the mortgage company will force insurance oftentimes, and it could be 3 to 4 or 5 times more than your regular policy. So it's really bad.
And if I'm correct, that forced insurance doesn't cover your contents, right?
No,
just liability?
It's just the loan amount. Just the loan amount to cover for them for the building itself.
So you don't want to do that either.
Yeah, generally just covers the loan.
Yeah, and that's a terrible place to be in as well, because if you get a fire, okay, they're paid, but you lose everything.
It may not be enough to rebuild the house.
No.
You know, depending on how long you've lived there, what your balance is to pay down the loan. So that's all they're concerned about is the loan.
Yeah, that's horrendous as well.
Yeah.
So that initial policy, if you don't go for the additional coverages that you probably need, you do want to revisit it to make sure that you find out the best way to cover your family. That's probably the best thing that I would suggest. And there's a whole lot of other things that you probably want to discuss, you know.
Right, there's a lot more to discuss. We just kind of touched the surface in the podcast. But there's so many more coverages and options and things when you sit down and go over the policy in depth and what you need to have and all of that. So
we don't want to give too much information, but just enough so that you kind of know what to look for. But before we do close out, what I do want to add is that State Farm has partnered with Rocket Pro.
Yes.
So refinance, financing for your first home,
pre-approvals.
So I'll let her tell you a little bit about that.
All of that. We're loan originators for Rocket Pro, and you can save on your closing costs because we're pretty much kind of considered a wholesaler for them. So it does help you in the closing costs if you go through a State Farm agent that's licensed to do mortgages.
Nice.
It's a loan originator. Yeah.
Okay. So interest rates.
That's the benefit.
How do they compare?
The interest rates are similar. So whatever Rocket is offering, that's the same interest rate. We don't have a different interest rate. It's just that on the closing cost, you may save on points.
Okay.
Yeah, so you get a discount basically on your closing costs.
Okay. So if you already have a mortgage company that you've worked with to get your pre-approval, when you go back and talk to your agent at some point, it may not be a bad idea if the rates are still adjusting and flexing to see if there's something different that they may be able to do.
Right.
And if you're looking to refinance your home, so you definitely want to check it out, especially if you can save on closing costs. Any kind of savings is
so expensive, so everything helps.
Yes.
Everything helps.
So make sure you make an appointment, go in and sit down and talk with them to look at your whole financial package as far as with your triangle of protection.
Yes.
The home,
the house, the life, and the disability.
So definitely want to look at all that. And then you may get a chance, because I'm so excited for our special guest, which is Jake.
Everybody's excited about Jake.
You may get a chance to see Jake.
Jake is popular.
Meet Jake and shake Jake's hand. Take a picture with Jake. And for those that are really excited, you might be able to dance with Jake.
Oh boy. Yeah, you could do that. I'm going to record it. I'm going to record it if you dance with Jake. Put that on TikTok or something. I don't know.
I've already taken a picture with Jake and I have posted it on social media.
There you go.
So I think today I'm going to take another picture with Jake because I'm just so excited to see him again.
I wish we had the real one here for a little bit.
You're right.
That would be nice.
That would be interesting. So anything you could think of that someone may want to know if they're buying a house or refinancing, or actually if they're in their home and they may not?
I think what a lot of people are surprised by is whether or not the loan is escrowing. So they think that they can maybe pay monthly to get it started. But I guess depending on your closing, you may have to pay us up front, or they may collect the funds from you and cut a check at closing. Oftentimes, whatever that annual premium is, you got to factor that into the closing and pay for the year. So
very good point. And so that's usually something a realtor would tell you. I told you she was brilliant. So that's part of your closing costs.
That would be the loan. You're a good realtor, so you do it, you know. But you're most realtors person. Are mostly just concerned about the property. But the loan rep should tell them whether it's escrowed or not.
That is true. And with most of them
do not know till the last minute.
Yes.
Unfortunately, sometimes we're the first ones to tell them about an escrow.
Yeah. Yeah.
And that's not really our lane, but we do know a little bit about it.
Because they do ask. I actually did get a client that called and said, well, what happens with the taxes and insurance? How do I pay that, or who pays those? And so that's part of your closing costs. So your lender will give you what's called a good faith estimate, which will show you all your costs that are possible. And it's an estimate until they actually know all of the numbers from the title company and whatever day you're closing, what the taxes look like. It's an estimate. It should be a close estimate because by law, with the new TRID laws, that's TRID, you can Google it. With the new TRID laws, they have to be within a certain percentage. They can't be too low, and then they come and tell you need $2,000 more. That's not supposed to happen. So part of that is the pay for the insurance up front for the year, and then after you make your payments and your mortgage, like you said, they escrow it in. So part of that goes to your taxes and part of that goes to your insurance. Most of them are required to escrow. Very few are not, and those that are not are those people that have credit scores that are over in the 800s, and you're putting down a really large down payment. Then you can pay your taxes and insurance yourself and not have it escrowed. I actually do have a client that did that last year, which I was surprised when he told me, but he put down a really large down payment and his credit score is like super high. And so they allowed him to pay his taxes and insurance himself.
Right.
But normally, no. They are normally required because if you let your insurance cancel, the problem that you have is that if you do have a fire and there's no insurance, then they lost their investment and you lost your home. So they lose a lot of money. And if your taxes are not paid, I believe in Wayne County, at your third year, they put your house up for auction, and then they lien it. So they make sure that doesn't happen by escrowing those. So, but yeah, so that's why you need to have the insurance paid. And sometimes they will let you pay at closing. Sometimes they'll have you pay ahead of time. But one thing they don't let you do is pay monthly,
right,
or quarterly, or semi-annually. It's either you pay at closing or you pay before, but you do need to give the net certificate at closing or before closing that shows that, yeah, I have an insurance policy in place and it's effective for the day of closing.
Right. Oh, the other thing, there's some discounts on the homeowner's policy. So if you update your roof, if you update the utilities, the furnace, the AC unit, your plumbing, your electrical, just be sure to let your insurance company know so that you can get some discounts if they're, if you have that, if you pay for that, you want credits for that. And then also security alarms. So if you have an alarm system and it's centrally monitored, then you get an extra discount. You just want to have the certificate of installation, and that'll help you save as well, the home alert discount.
Now she did say monitored, so I don't think the Ring camera counts.
It has to call a centrally monitored location so that they can contact the police if needed.
So your Ring,
right,
your Blink, your Arlo.
If you're busy and you don't see that someone is in your house or something's going on at your house, you don't see it in the police or someone's not contacted, then no, you want to get a discount for that.
Yeah, so those don't count.
Unfortunately.
Because I have a Blink and I know most of my neighbors have Ring.
Oh yeah.
And quite a few people I know have Arlo, but they are not monitored, so they do not count. So, and also I think that with some of the insurance companies, some of the alarm companies, they not only monitor burglary, but also fire.
Yes. So there's fire and burglar. So it's good to have.
So if your house is burning,
help minimize your loss if you have one.
Exactly.
Someone can get there sooner. So that's why you get the discount.
Now the only alarm that I think does not make any sense is the alarm that they have on sump pumps.
Oh.
They have an alarm so that if your sump pump overflows and it goes on the floor, there's a thing that's on the floor that triggers an alarm, but the alarm is audible in the home. So if you're not at home.
Oh, that's a coverage on the backup of sewer and drain too. So if your sub pump fails and the water backs up in the house, we won't cover the sub pump, but the damage that's from that. Hopefully it doesn't happen if you have a backup, So
I got another question now. So what does that cover? Does it cover the walls, the ceiling, the floors, your couch, your stereo, and all that?
It's basically for the dwelling itself. So if you have a finished basement, you definitely want to have it. So if you have carpeting, generally tiles not messed up, you can usually mop and do different things. But your drywall, we had one person that had paneling. Sometimes you may have a kitchenette down there, your cabinets are damaged, different things of that nature. Appliances, so your furnace, if it's damaged because of it, depending on how high the water is, washer and dryer, hot water tank, those things are covered. Contents can be tricky. So we tell people to try to elevate the contents, but they are covered as just a percentage of the regular amount. So oftentimes it's like, what, 10% or 30% of, it's 15 or 30% of your personal property amount.
That's not bad.
Or dwelling amount, I should say.
That's not bad, because at one point it wasn't covered at all.
Yeah, so right. So something is better than nothing. So once again, in our example, if you have a $100,000 house, if you have the higher limit, you would have $30,000 available for the damages to the basement from the loss.
Okay.
Or it could be your it could be your main level if you don't have a basement, if you're on a slab.
Okay.
So it doesn't have to be the basement, but a drain backing up.
Yeah, which, like you said, since 2016, there's been a lot of that.
A lot happening.
A lot of that.
We make sure to go over all of that.
Okay. Yeah. So make sure you have a thorough conversation with someone who actually is trying to make sure that your home and your items are protected. Ask all the questions and know what you want to do, you know, in the event of an untimely passing away, or unfortunately you're out of work, disabled for some reason and can't work, and you still got to make those payments. These are things that you want to think about and ask the questions about so that you can protect you and your family moving forward. So again, I thank Anita Murray for letting me be here and interview her.
Thank you for having me.
Having this conversation.
Thank you. It's been a little while that we've tried to. But anyway, if you think of any questions or anything, feel free to call us here at the office at 734-728-5525. We'll be happy to help you, whether you're insured with us or not. Of course, we prefer that you're with us, with State Farm. But if you have any questions, we'll be happy to answer them for you.
I don't think Jake's going to be here forever. So this is January 2020. Anytime soon you stop by?
22. What year? What is it? January 2022.
Oh my God.
Say 20 twice.
20 twice. Okay, so it's January 20 twice.
January, where you said, well, you said 2022, but today is the 20th though, so I think
so
it's January 20th, 2022.
It's a tongue twister. That's terrible.
Yeah.
So it's January 2022.
There you go.
That's too much.
That's the date.
But anyway, if you come soon, you get to see Jake, because I don't think he's going to stay here for too much of a longer.
I don't know. He's pretty popular, so we just let him be.
He'll just be here for a minute.
Yeah. He scares a lot of people, though. Sometimes when we're in the office and we forget that he's in the corner, think someone's here, but yeah.
I think he needs a hat and a scarf, but that's different.
Yeah, that's true. I guess we could do some seasonal things to Jake.
Right. So again, thanks for checking in. Make sure you tune in. Like, subscribe, share, click the button so you'll be notified when new ones come up. We'll be producing them every Sunday night, so they'll be fresh for you Monday morning. And anytime you have any questions, information is in the description. Just reach out. And if there's a topic I haven't covered and you want me to cover it, just let me know.
And Edna's wonderful. She's my real estate agent. She's helped me with several properties.
We've been together for a while.
Long time. So I'm happy to be here. Thank you so much for having me on your show.
And thank you.
Thank you.
All righty. Have a good day, everyone.
Bye-bye.